Everybody, ladies and gentlemen, hello and welcome to us here at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's really a combi. We want to understand why we look at charts. We want to understand what we see on those charts. And when we have identified that potential setup, we want to implement a potential trading strategy and implement that strategy using Nadex contracts. Today we want to focus here on the euro-dollar contract as a basic underlying, but if you're not so much into euro-dollar, everything that we teach you guys here today is really applicable to all those other markets as well. If you have a look at your webinar interface, you can see that small questions box, and I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. Perfect. Thank you very much, everybody. Really appreciate the feedback. Yeah, guys, we are here to learn something together. So if you do have any questions, please put those questions in that small questions box, and I'll do my very best to answer those questions as we move through the webinar. This is what we're here for. You're not interrupting my flow, and I really want to highly encourage you guys to ask those questions that you might have. Let's have a look at our risk disclaimers, which I need to make you aware of before starting with the webinar. Take a moment of your time to read through them carefully and make sure that you're okay with them. And by the way, today's webinar is scheduled to run for around about an hour. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the instruments you're using before you're getting active in the market. Neither Trade with Position nor myself are investment advisors, and therefore nothing that we say should be considered to be actual investment advice. All examples are shown for educational purpose only. All charts today are really screenshots from past price action. They do not reflect current market conditions. So definitely nothing actionable here today, apart from learning something, apart from understanding why we trade the way that we trade. So please make sure you're okay with this before continuing with the webinar. And we have also our good risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, today's webinar is brought to you both by Trade with Position and by Nadex. I would like to kick it off with a very brief introduction of those two companies. Trade with Position was founded back in 2006 by Nick McDonald, and we have been providing education for retail traders since then. We are providing not only education for retail traders, but also we help companies like exchanges and brokers worldwide to educate their clients. And this is why we're here also with Nadex. We teamed up with Nadex back in 2011. By now you will have realized I'm not a professional presenter. Very sorry about that. But I'm a professional trader, which means I'm trading those very same markets using the same instruments as you guys do. We're a company run by traders, for traders, and I know this to be 100% true for all of my colleagues here at Trade with Position. We are specialists in trading strategy. So it's not so much about an asset class, but it's rather being able to apply technical analysis, having a well thought out plan to approach the markets. We want to plan our trades and then trade our plan. Nadex, of course, is a derivatives exchange subject to regulatory oversight by the CFTC, newly formed in 2007. Just like all the other major exchanges based in Chicago, the financial heart of the futures and options markets, and all contracts here at Nadex are settled in cash, no physical delivery. So no worries. If you have that oil contract or that gold contract, or trading soybeans or any other of those markets, it's always settled in cash. You don't have to worry at all about physical fulfillment. Wide range of global markets are available to trade here at Nadex, and the two big instruments that you can use to trade those markets are binary options and spreads. And today we want to focus on those spreads. Of course, the main interface to Nadex to get access as a member of the exchange is to use the Nadex platform using your browser, available on any trading platform, any PC, Mac, Linux machine that you have. So if you have a browser, you're good to access those markets and actually start trading. But also, of course, you have your access using those mobile platforms as well. So if you haven't done so, maybe have a look, install them on your platform, give it a go, take it for a spin. I think it's crucial to be able to have access to your positions, to your markets. Not necessarily to indicate to initiate new positions when it comes to trading, but just to see where the markets are right now and to be able to adjust your position just in case something happens in those markets where you want to change your battle plan. Today's agenda. We want to focus today on the euro-dollar, the world's largest currency pair to be traded, benefits of trading currencies market with here at Nadex contracts, and then why do we want to trade those markets? We want to have a reason, not just the itch to trade a market, but rather we want to have a setup. And we use technical analysis to help us identify those potential setups. And we want to outline here today what we're using in order to go for those setups. And the major thing for us is always trends and multiple time frame analysis, support and resistance levels. And we want to show you guys how you can just mix in pivot points and Fibonacci levels to help you get high probability setups. It's high probability, but this is far from being a sure thing. Trading is all about probabilities. We will stress this several times again here today. Trading is not about having only potentially profitable trades on your hands. This will never be the case. Trading just doesn't work like that. Trading is about stacking the odds in your favor and having potentially more profitable trades on your hands than losing trades. But you will never get around those losing trades. Just make sure you understand that. We want to combine all those ingredients that we have discussed previously then and turn them into a complete and simple trading strategy. And then we want to show you how to implement that strategy here using Nadex contracts and how you can take your trading further here at Nadex. Euro-dollar, the world's largest currency. Over the Atlantic in Europe, the year was 1999. Back in that year, the common currency got started, the euro, obviously. And getting this right is something like getting the distinction between Great Britain, UK, United Kingdom, and England correctly. So the European Union are many countries. Right now, it's 28 European countries, but not all of them have the euro as a currency. Actually, the monetary union, which has the euro, is just a subset of 19 of those countries. And so, obviously, once the euro was established, physical currencies starting back in 1999. In 2002, the big contract got started trading the euro-dollar, and since then, this is one of the biggest contracts to actually trade it in the markets. And just by combining all those currencies and combining them into the euro, you can easily see why the Eurozone is one of the biggest trade partners with the United States. Obviously, China also plays a major role here, but this combined monetary union within Europe, the Eurozone, definitely one of the largest counterparts for the United States when it comes to trading. We want to focus here today on that contract when it comes to trading. And just to give you guys here some numbers, today trade volumes on euro US dollar account for approximately 28% of the whole currency market. Euro dollar is one of the largest and most popular markets in the world to trade, popular with both amateurs and professional traders alike. The question is, why is this important? Why is this not just background noise? As a trader, I'm looking for liquidity. And liquidity is important because liquidity gives me tight spreads. Liquidity usually allows me to get easily in and out of my positions. It's easy to find a counterpart to close my position, for somebody to take the other side of my trade. When it comes to trading, always there has to be a counterpart. I always have to have somebody, when I want to buy, that other guy must be selling, and the other way around. So liquidity is good because it makes it easy for me. It reduces the cost of doing business. And here you can clearly see euro dollar, definitely one of the biggest markets out there. It's quite easy and liquid and therefore easy for my trading. So what are the benefits of trading euro dollar using Nadex spreads? Trading the euro dollar with Nadex spreads can present further advantages because the spread here at Nadex is a fixed risk instrument. True for all contracts tradable here at Nadex, and this is one of the biggest benefits that I see trading Nadex contracts. You always know the risk that you take when you open a position up front. In the deal ticket, you immediately see how much money you can lose if you were to submit that order right now. You know that risk up front, and there can be no nasty surprises. And even if everything goes completely wrong, your risk is really kept at this level that you knew when you initiated your position. Your total trade risk is known before you place the trade. And this makes it so easy to implement proper position sizing and to implement proper risk management. And actually, this is one of the main reasons why most traders that actually start and think trading is their new career have a hard time getting started with trading, because proper risk management, proper position sizing is the one thing. It's boring as hell, but it keeps you in the game. It makes sure it's for survival. It makes sure that you don't blow up your account and that you will be still here to trade and try again tomorrow. So proper risk management, proper position sizing, absolutely easy using those Nadex contracts. Next huge benefit, trading those contracts requires less capital than trading conventional instruments. Usually when you're trading futures markets and the normal options, plain vanilla options, you already are taking a leveraged position, but which means you have to supply less capital in order to trade those markets than actually trade the underlying market itself. But even here now with Nadex contracts, you can much easier really make trading work for the account size that you have available for your trading. Let's have a look at some of those Nadex spreads here, and let me grab my super fancy laser pointer here. Here we're looking at several spreads. It's a euro US dollar spread, and here I can see the range of that spread. The first price is the so-called floor price, which means it's 113.40, and the ceiling price, the upper price level, is 115.90. Which means if we put this here to a chart, this area here, that's the floor level. Price of that spread can't drop below that floor level. So even if price now decides to shoot for parity, go for 1.0, doesn't mean a thing for that spread. That spread will, the lowest it will trade is 113.40, because that's the floor level. The ceiling level is here 115.90, 115.90, more to the upside. So you have the ceiling, you have the floor level, and within that range, if price of the underlying market moves higher, price of that spread adjusts and also moves higher or goes lower, but it's really kept within both the upper and the lower limit here. You have a variable payout structure, huge difference to normal binaries. With binaries, it's always this all or nothing, 100 or nothing at all at expiry. Here, it's really, okay, where is price of the underlying within that range? And that's the payout price. As you actually have here a lower level and an upper level, those two things start to balance each other out when it comes to time decay, which means that when we are going towards expiry, time decay, theta, doesn't play that much of a role as it would do for binary contracts. So it's less volatile while approaching expiration. It tends to track price pretty closely within the floor and the ceiling levels. So now we know what the underlying market is. Now we know what spreads actually are. And guys, by the way, this was really just a very quick and brief introduction. Please hit the archives here at Nadex and have a look at these other webinars and recordings where we also highlight those those instruments and explain those instruments in a lot more details and depth. So by all means, please definitely welcome you guys to sign up for other webinars upcoming. Looking forward to talking to you guys again soon. Coming back to today, we know what the market is, we know what the instrument is, but why would we want to trade this market right now? This is where advanced technical analysis comes in. And the most important thing for us here is to understand what is currently the trend in the market. Once again, I hinted at that before, but there are never any guarantees in the markets. And therefore, trading is all about probabilities. We want to gather many small advantages, because if we have many small advantages, that trade could turn out to be a potentially profitable trade. We never know, and therefore, as we never know, it never makes sense to bet the farm on any one trade. Our trades must be comparable. Once again, position sizing and proper money management. But looking at charts and knowing what to look for in those charts, everything that we can identify there helps us to stack the probabilities in our favors. And once we have a certain amount of probability stacked in our favor, we actually have built or made the case for taking a trading decision. So we want to have multiple reasons to support our trading idea. One reason is never ever enough. Have multiple reasons to consider a trade. Start building the probabilities with the market you choose to trade and the trend itself. And trend analysis is considered by many professionals as the single most important technical analysis tool. Why? Because it provides us with context. It explains to us what the market currently is doing. What is the market? The market is just a bunch of people, many people. We've seen how large that market here is with the euro dollar. And if many people are currently rather more aggressively buying that market than selling it, there seems to be some momentum on the buying side. And therefore, there might be a tendency that what is in motion might stay in motion. And therefore, if people have been buying before, probably there's a higher probability, at least a little bit, that they might be doing so in the future. So trend gives us this context that we need to understand in which direction, what's the big picture of market direction right now. The good news is that reading the trend is not something where you need to have some magic ball, some crystal ball, some kind of magic indicator. It's straightforward, it's simple. Usually, or not usually, sometimes people come to me and tell me, Philip, what you're teaching here is not sophisticated, it's not advanced stuff. Guess what? It's robust. And I'll take robust over fancy every single day, because robust helps me in the end to make money consistently in the market. And therefore, I don't need all the bells and whistles. I need something that works more often than not. And just looking at those charts here and trying to understand what is the market telling me here is way more important than any fancy indicator for me. Reading price action, being able to understand price action actually is really powerful and important. So what is price doing here? Well, price is pushing higher and making a high. Then it starts to pull back and it forms a low. And then price continues to move higher again and then pulls back. What we made here was that price made a high, price made a low, and then price made a new higher high. It was a higher high at that moment where price actually pushed beyond the previous level of the high. And as simple as that, as long as the price is making new higher highs and higher lows, higher high, higher low, I know that is an uptrend. As simple as that. If I'm not sure if this is actually now here a new high or not, doesn't really matter. Currently, the big movement here is to the upside, and that's good enough for me. If this high here was really just a hair higher than previously, if I have to take my quote pane and really look at precise price points, guess what? There doesn't seem to be so much confirmation in the market, so much the picture is not clear. And when the picture is not clear, guess what? The trend might not be that strong after all. I want to be something as clear as here. I want to see this picture and this is clear, it's an uptrend, higher highs and higher lows. I don't have to look even into details here. The picture, the story should be clear. If it's not, move on, go to the next market. Same thing here for this downtrend. Price is making lower lows, and on those pullbacks, it's forming lower highs. All I need to see here, and I don't have to go back here until infinity and beginning of time to check what was the price there. No, I see those last few lows, I see those last few highs, and it's absolutely clear for me that this currently here is definitely a downtrend. On the other hand, if you see something like this, where price is making a lower low, and now price is shooting higher here to make a new high, it's a higher high. All right, we might be starting here maybe a new fresh uptrend, but guess what? Price is then pulling back to form a new lower low. Higher high, lower low, and then price is making another new higher high. I don't have any clue what's going on here. Higher low, lower high. It could be going here for a downtrend, but for that we would have to see a new lower low. It's absolutely not clear what's happening here. And this is good enough for me, because if it's not clear, my most basic assumption, my most critical factor for that market, for that time frame, just isn't there. I don't know what the context is. I don't know what the trend is. And for that reason, I would move on. Couldn't care less about this market at that point in time. There are many markets out there that can be traded using Nadex contracts. So why focus on a market which just doesn't give me that environment that I need to apply my strategies? It's just like you learn the language, but you're now in a different country and you can't speak that language there. What you have must be applicable. And the language that we are speaking here is trend following. We're looking for trend continuations. And here I don't have that trend. Therefore, I can't communicate properly. I can't find my setups. Multiple time frame confirmation, also very important. Again, remember, why are we doing all those exercises? We want to stack the odds in our favor. And stacking odds in our favor can also be done by looking at different time frames. We can increase the predictability and confirm the strength of the trend by analyzing higher time frames of the same market. We think it's always advisable to check higher time frames. The trend of the higher time frame will indicate the overall direction of momentum in the market. Major support and resistance areas will also much more easily become apparent on those higher time frames. Having agreement from multiple time frames adds further predictability to the direction of the overall market. We want to see what the big picture is. The daily chart could look like the sky is falling apart. Everything is crumbling. However, on the weekly chart, this is just merely a pullback to price equilibrium levels. The market is catching its breath and getting ready for the next leg higher. You always have to put price action on one time frame into perspective, and we do this by looking at higher time frames. For example, if we analyze the daily chart, I want to look at a 2-day chart, at a weekly chart, at a monthly chart. So what is it that we can see here on the 60-minute chart? That market is clearly in what? It's in a downtrend. I don't even have to pinpoint if this was the low, or that was a low, or that was the low, or here, or just that. And no, the big picture, it's absolutely clear. It's a downtrend. We have lower lows, and all those pullbacks here always take us just to lower highs. Lower lows, lower highs, beautiful downtrend on the hourly chart. What's the big picture on the daily chart? Yeah, the market has been rising, but what happened recently? It's not about going back to the beginning of time, it's just what happened recently. And recently I can see that the market made a new lower low, and we can see that this is a lower low compared to here, and this is a high, but it's a lower high compared to here, and clearly a lower high than here. So just looking at this area here makes it perfectly clear that this market currently is in a downtrend. So if the daily chart is telling me that this market is currently going down, I think that if I find a potential short setup now on my hourly chart, I get support from this higher time frame. If the market is falling on a daily chart and the market is falling on an hourly chart, I feel that those two time frames support each other. So that it's not just that the hourly chart has to work out. No, it's getting support from the daily chart. Guys, does this make sense with those multiple time frames? And just a quick reminder, if there happen to be any questions, That's why we're doing those live webinars. I'm more than happy to answer your questions here, guys. So once again, please don't be shy. And there are most definitely no stupid questions. I hope my answers won't be stupid, but your questions definitely, they can't be stupid. So once again, please don't be shy. Multiple time frame confirmation. We want to trade with the trend. And here we're looking now at a Euro US dollar chart in a nice and steady uptrend. Why? Obviously, we make a low, we shoot to a high. We pull back and we shoot to a high. We pull back and we go for the next high, and we pull back, and guess what? We're going for the next high. And this keeps on going and going and going and going. Does this go on forever? No, it doesn't, which is why they will be losing trades. But if we stay with that flow and apply everything correctly, we should be able to have potentially more profitable trades on our hands than losing trades. And you see, one trading opportunity here might be a second, a third, a fourth, and you're just potentially cashing in here on those opportunities going along with the trend. Identifying turning points within the trend presents lower risk opportunities to take advantage of the major trend momentum. So the idea here is, I have realized that this is an uptrend. So people might think, this is all that I need to know. I want to buy this market. No, I don't want to buy this market at any price. I want to have a good deal. I want to have a good deal. I want to have a good trade location. This is why I'm waiting for those pullbacks to actually occur. Jason is asking, what are some of the things that can affect this market and cause it to move? Well, we have to answer here on multiple time frames again. Thanks for that question, Jason. We have to answer on multiple time frames. On the long-term view, obviously the fundamentals, economic data, interest rate decisions by the Fed or by the European Central Bank. Think about non-farm payroll numbers. Think about inflation numbers, gross domestic product, and so on. All of this, or just the potential trade war with with Board of Customs and penalties for importing goods and so on. All those are decisions that might affect here the exchange rate euro against the US dollar. But that's the big picture. Do I think that those moves, those fundamental factors affect the market here when I want to trade on a 15-minute chart? No, I don't think so. I want to be aware of those news events if there are scheduled news events at that point in time, within the time frame or the time window of my trade. There, I want to be aware of those and trade accordingly. But otherwise, those big things here really don't mean a lot when I want to trade 15-minute charts, hourly charts, daily charts, those things. This is really about the big picture, daily, weekly, monthly, and so on. But Jason, thank you very much for that question. Glenn is asking, if you're only looking back on the day chart, what about all the buyers or sellers waiting in the wings, so to speak, from the previous day? Doesn't that also play into a trader's decision? Glenn, I'm not really sure I got that question. You mean those people, for example, and we can talk about this when it comes to talking about support and resistance levels. People will be waiting there at certain levels with their orders ready, which is why those horizontal levels of support and resistance become leading indicators, which give us an idea about what the time frame will bring. So maybe we should revisit that then. And if I didn't get your question correctly, Glenn, by all means, please let me know. Ludmila is asking, when is the best time to trade the euro against the US dollar? For me personally, it doesn't matter. I look at those charts, I see a setup, and I trade that setup. I check all my boxes, and if everything is working according to plan, that's it. Some people like to focus on the beginning of the London session. Some people like to focus on the beginning of the New York session. Personally, the volume that we guys are trading, it's nothing compared to the big market. And therefore, here, the underlying market, you see the setup and you take that trade. At least that's my approach here. Glenn, more on that in just a few more minutes. Thanks for clarification. All right, so I don't want to buy this market at any price. I'm looking for a good deal. I'm looking for a good pullback. The question is, how can I identify that good pullback? Is there anything that I can do? And actually, I have multiple tools that help me and assist me in finding those good pullbacks. And one of those is, for example, good support and resistance levels. Many people use sloping trend lines. We do not like sloping trend lines. We are going for horizontal levels of support and resistance. Those levels actually are levels where people have made trade decisions in the past. And those support and resistance and their trade decisions in the past create structure and price action. And this helps us to identify potential decision points. And Glenn, I think this is going in your direction. If people have reacted to those levels in the past, if they have initiated a position there, there's a decent chance that they might do so once again in the future. Well-defined levels of true support and resistance create opportunities for trading a breakthrough or bounce off of those levels. True support and resistance occurs when the market tests a specific level at least 2 or more times within a few ticks or pips. Doesn't really matter how far apart those touches are. The nice thing is when it comes to horizontal levels of support and resistance, they are precise. The sloping trend lines, you always have that issue that obviously that line is sloping, and you will always have this, you will always have to measure what is the current level of my sloping trend line right now. You will have to adjust your orders all the time. And are you really 100% sure that you have drawn that trend line in correctly? And all this is gone when it comes to horizontal levels of support and resistance. When we're going with technical analysis, we aim to predict how price may react around those support and resistance structures and position ourselves to take advantage of that. Trading is pretty much all about not just reacting to what has happened in the past, but we want to have an idea of what happens in the future. We will never know. I don't have that crystal ball, neither will anybody else have one. But again, stacking probabilities. If people have reacted to a price level in the past, there's a decent probability that they will do so again in the future. Will they have to do so? No. But again, it's a little bit more likely than not, don't you think? And this is what we are trying to achieve here with technical analysis. Now, we're looking here at this level of true resistance. Why is it resistance? Because price keeps on pushing against this level and it's not able to push through. We have tested this level here once, and guess what? Here at the second time, this is the point in time when we were able to draw this line in. And now price is approaching this level here for a third time. And guess what? I know now people have reacted to that price once, twice in the past. Actually, this is one big touch here, but we have been pretty close here for at least 3 bars. Do I think that price will now just push through? No. Buyers were reluctant at this level to pay higher prices. Sellers became more aggressive and actually started to drive prices lower. And so decent chance that this might be happening again here as well. However, what I notice is those pullbacks are always a little bit less deeper than before. Less deep than before. So we see here a low. Actually, this is a higher low. And this pullback here is another higher low. Might be an indication that some kind of pressure is building up. And once we're shooting here for the next test, we might be able to see a breakout. We will have to cover a lot more here about those things, but get a feeling for where those highs and lows actually are and what price actually is doing when he's going here for those multiple tests. So true resistance, and of course the other one would be true support. True support is now defined by at least 2 or more touches at a specific lower price level. But guess what? I don't care if it's support or resistance. I just see there's a price level. And the funny thing is those lines stay here. So if price actually pushes here through this level, I know that what was resistance at that point will now act as support in the future. Support and resistance, golden rules. As I've said, support often becomes resistance and resistance often becomes support if those levels are retested. Price is breaking through here. We had a small test there. Price came back, tested this level again, and now you can see price reacted to this level here and clearly here. And sure enough, when price broke here finally through again, acted here once as support, acting as support again. Now here in this area, a little bit of support, finally breaking through, coming back, acting as resistance again, acting as resistance, resistance, resistance once more. Now with price coming back to test this level once again, I'm pretty sure it should be acting a little bit as support. Same thing is true here, acting as support several times, price is broken through and going up back again. Did price immediately just come back here? No, it was testing this area for a little bit here. So at this level here, price was acting again a little bit as resistance. Put those numbers on your, put those lines on your chart. If there's one thing I could teach myself going back in time, it would be, Philip, pay way more attention here to those simple, stupid, and boring horizontal lines of support and resistance. Absolutely boring, but so powerful. It just makes sense to pay attention to those. Dan is asking about a proper platform, a charting platform for Forex prices. You pick what you like best. We don't make any recommendations here, but there are a ton of different platforms out there. During our live market commentary platforms, you can see what we are using there. I won't drop any names here right now. In the end, it doesn't matter. The way those Nadex contracts are modeled is that they refer to the underlying market and take those prices for their price formula. And as long as you have something that provides you there with good market data, you should be good to go. Picking the proper charting platform is something as impossible as, I don't know. I've been trading forever and I'm still looking for my personal perfect charting platform and perfect data window. But that's just me. You pick what you like best, as simple as that. All right, guys. Yeah, resistance and support and resistance again. Now, zoom out, go to higher time frames. Have a look at those higher time frames, because on those higher time frames, those levels of support and resistance become much easier to be spotted. And even if you are moving away and beyond those levels, you see prices coming back to those levels. Those lines stay on my chart pretty much forever. Yes, of course. Robert is asking, will you be talking about advanced spread strategies to take advantage of those market conditions? Just hang in there with me for just a few more moments. We will be coming to the implementation of those things and putting everything together in just a few moments. Another thing that we can use to help us identify potential pullback areas could be pivot levels, or pivot points, as they're sometimes called. Pivot points originated from pit trading before we had electronic trading on computers. Those pit traders needed some kind of reference point, some kind of framework to know where the market is with regard to yesterday's price action, for example. And therefore, they used yesterday's opening, high, low, and close prices and to came up with some of those reference points, and they were called pivot points. They're calculated on past price action and provide pertinent levels of possible future support and resistance. And we can only calculate those pivot points based on the daily price from before, but we could also use, for example, weekly prices, weekly open, high, low, close, and monthly open, high, low, close. And we can put them on our chart. And funny thing is, even though people don't have to use them today, still price adheres to those and reacts to those pivot points and price levels. And for that reason, it's absolutely fine and okay to put them there on our charts and use them when it comes to our trading. Once again, they are leading indicators. Why are they leading indicators? Well, yesterday's price action just finished. And at that point in time, I can calculate my pivot points for the next trading session, for the next day. I know where those pivot points, support and resistance levels will be, even though the new session hasn't even started. That's a leading indicator. It gives me an idea about what the future might be doing. Here we're looking here at the pivot point. That's the central point, and it's computed by calculating the mean, just summing up the high, low, and close, and dividing that sum by 3. And what's the time frame? You pick your time frame. Usually it's done for the day, but you can do it for the week and the month as well. And now you have several formulas calculating support levels and resistance levels. The support levels are S1 to S3, and the resistance levels are R1 to R3. Would be too far stretched now to go for the formulas there. They are all over the internet, Investopedia, and just like always, Google will have an answer for you. You can look up those formulas easily, just in case you're interested. And the funny thing, once again, price often respects those pivot levels, regardless if they are support or resistance pivots. So just having those on your chart and knowing that those have some kind of, I like to call it magnetic properties. It seems the price is attracting, that those pivot levels actually are attracting price. So, but that's again just me. Here you see those different levels. Here you're seeing, for example, the weekly levels, you see the daily levels, and then also later on the monthly levels. And you can see the price is moving from this pivot level up there to the next one. And where was the high? It was sitting here at the weekly and coming back. So price tends to bounce from pivot level to pivot level to pivot level. Now, is this good enough? Is this actionable? No, this on its own is for me not actionable. But remember, we never want to make a trading decision just based on one indicator, on one thing alone. We want to stack the odds in our favor. We want to make all those different things work together and come together. Another of those tools can also be Fibonacci levels. And bear with me, once we're done with all the ingredients, we start to mix up everything and form our recipe. So with Fibonacci levels, we're actually looking here. Once again, we want to have an idea about the future. We want to predict something. And with Fibonacci levels, we can predict future support or resistance levels that price may retrace to within a trend. Again, we never know for sure, it's just a may. For this reason, Fibonacci should be used within the context of a confirmed trending market. If you don't use the proper tool in the proper context, the tool probably won't work. Same thing with Fibonacci. You have to have a proper trending environment, and only then does this this tool, those Fibonacci retracements, actually make sense. If not used correctly, results are definitely not very useful, or at least highly subjective. The Fib levels that we traders use are usually 38.2, 50, 61.8, and 78.6. 50% is not strictly a Fib level, but it's the midway point and often used in conjunction with 61.8. And actually what we are using here is, just a second, what we're using here is we're looking once again to formulate some kind of buy zone or sell zone. And our regulars know that we like to use our moving averages for that. Here we're using Fib buy zones and Fib sell zones. And guess what? The buy zone and sell zone are sitting here within the 50% and 61.8% retracement areas. So if price is moving from this recent low to this recent high, and it starts to pull back, if I do happen to get a pullback between 50 and 61.8, then this might be just a certain sweet spot for that pullback, and there I might be looking for a trend continuation. Same thing here in this sell move. If price is moving from this swing point high to that swing point low, what might be a decent pullback here, that pullback might take me here to the 50% to 61.8% retracement. So this area, once again, price pulled back there and continued in the original direction of the trend. Again, nothing is sure. It's just more likely than not. And getting many more likelies than not is what makes those things potentially work in the end. Now, we got that question, can we combine everything, and how do we make this use, or how can we apply that using spreads? Let's combine everything. Identifying support and resistance clusters. A cluster is where several things come together, multiple occurrences happen at the same point, either in time or in space. And if a lot of things come together, might be interesting. something might be going on there. So what are we looking here at? First thing is, I can see now here that price has been shooting higher. I'm making higher highs and higher lows, and this move higher here. That's my swing point low, that's my swing point high. I draw in my fib retracements here. And there, from that point onward, when I think that this here is my swing point high, I'm able to draw in those fib retracements. So at that point in time, something after 3 p.m., I'm able to say that a potential pullback might be going, if it's harmonic and if everything is happening according to the book, then this might be a sweet spot for a pullback. And guess what? We happen to get that pullback here. Where did this pullback lead us to? Perfectly here in that zone. What did we find here as well, directly sitting in that zone? There was a pivot. There was that pivot point. And I don't care if it's coming from a daily or a weekly, or if it's the S1 or S3 or whatever. No, there's a pivot. It's sitting in my fib buy zone. Multiple things coming together here. So hourly chart, Fibonacci buy zone and pivot clusters, and we start to identify predictable turning points within price action. Next thing, from this swing point low to this swing point high here, where did we get the pullback? We got the pullback here coming down here once again, 50.61.8. And you see it's not precisely that point, and then it carries on. We got a small overshoot, but this area here is clear. And what did we have here? We had a weekly pivot point sitting here in the zone as well. So once again, here we were able to identify that this might be a sweet spot here for potential pullback. Next thing, swing point low, swing point high, price is shooting higher, price is pulling back, and once we assumed that this is our swing point high here, we were able to draw in those fib retracements. I was able to identify this potential pullback area here. What was more likely to be hit, 50 or 61.8? Well, I have here that pivot point sitting perfectly close to the 61.8. And guess what? We got another one here in this area. So this area here, once again, a high probability pullback area. And yeah, just within that short frame, that time frame that we saw here, that short glimpse, we had this pattern now work here at least 3 times. Pullback to 50, 61.8, shooting higher. Pullback 50, 61.8, and shooting higher. And so once again, and guess what? We also got a bullish candle structure here for this pullback happening here right now. So where are potential support and resistance areas? Well, we can also see here, we have price touch here. We had several touches here again. So drawing in this resistance level, and now this resistance is becoming support at that point in time. And so 3 things coming together. The Fibonacci buy zone pullback, we have the pivot cluster, and we have support and resistance coming here into place as well. Now the question, okay, I've identified this pullback, and please note, at that point in time here, this is not hindsight trading. Here you could have told me, Philip, I can easily see what's going on here because it was in the past. I know it worked out. It doesn't matter. It's not actionable for me. You're right. But if something happens in the past, there might be a decent probability that it might also happen in the future. But here, this example now, this is the right side of the chart. This is the so-called here and now. Once again, it's a screenshot, but it's here, it's decision time. I don't know what's happening next. I just see all those things coming together. How could I trade that now using Nadex contracts? And here we are looking at those contracts. We are looking here at those 3 spreads available for trading right now. And we're looking here at those 3 levels. That support cluster that we have been looking for was sitting at 134.30. Now, our regulars know that I want to enter a long position, usually as close to the floor level of a spread as possible. So now I've built my case. I know that I want to have a potential long position in that market in this example. And I know that my support cluster is sitting at 134.30. So what could I be trading? I could be looking here at this first contract. Well, it's where we're very, very close here in this area. We are very close to the floor level. Sounds like a very nice trading opportunity. Maybe the second contract might be better, but guess what? 134.30 is sitting pretty much here in the middle between the floor and the ceiling of that second contract. And it's sitting pretty much at the top, at the ceiling of the third contract. So from those three contracts that I'm seeing here right now, probably the first one might be the best one suited. We could also be looking at different time frames, but probably the first one from those three here is might be, I want to avoid the word best, but might be that one that fits the bill of a lot of people. Very close to the floor level, which gives me a lot of room here for potential price move to the upside. Now, I'm entering, remember, this was the pullback here. That was my support cluster entry. And this is what price did pretty much next. Price kept on shooting higher, went in sideways here, but even if I entered here, pretty much at the low area, at the lower of this, of the range of that contract, all this here now was profitable territory. What this contract allows me to do when I'm entering at the low of that range is I definitely have a very limited downside. I know my risk always up front, but because I'm entering so close to the low of that spread, to this floor of that spread, my downside is limited. However, the upside is so much larger than the potential downside. And this gives me a great reward to risk ratio on that trade. That's the one thing that I'm going for here. I want to cap my downside, keep that potentially small. Those other contracts, they would have given me here potential entries or floor levels right here. So if price wouldn't have, if price hadn't followed through, if price would have dropped, I would have lost money. And I would have lost more money than with that contract where I entered pretty much at the floor level. So here I kept my potential loss quite small, the potential upside in relation, however, pretty large. And this is how I can make those contracts work for me big time. But remember, I had a case. I analyzed that market. I realized where was a potential turning point, and then I pricked the proper contract. Then I made sure to take that contract as close to the floor level as possible for that long position, and then the market actually moved higher to make that potential great reward to risk ratio really work for me. So once again, what is the method rationale? The path of least resistance is usually in the direction of the prevailing trend. A strong trend gives predictability in the direction of price action. If people have been buying that market like crazy, there's a decent chance that they will not stop just now and say, okay, let's sell this market. No, there's momentum for buying, decent probability that this momentum will keep on going. Trends move in waves of buying and selling. Momentum as price advances and retraces, identifying the turning points within these waves gives us lower risk opportunities to take advantage of the trend momentum. Remember that idea of I want to have a good deal. I don't want to buy because everybody was buying. I want to buy because right now, yes, everybody's buying. This is giving me the context. But obviously, some people took profits. Some people have closed out their position. The market has come back a little bit. I get that retracement. I was able to anticipate that, that retracement, that turning point, by using clusters of multiple support and resistance levels and indicators. And this is when I'm taking that lower risk trade, because now I have seen already my pullback, and now I'm able to initiate my position for potentially a good trade location, a good deal. So yes, we aim to anticipate those turning points, and we want to find strong clusters within strong trends. And often those act as walls the price bounces off, presenting trading opportunities in the direction of the major trend. Just a second. So identifying markets with strong trends across multiple time frames. We want to locate lower time frame clusters of support and resistance, and some tools that we can use. And by all means, guys, you can use different tools here. You can go for oscillators, you can go for moving averages, you can go whatever you think gives you an edge. And whenever you are able to identify a certain pattern, a certain setup, by all means, go for it. But remember, you want to stack those probabilities. Just one indicator is never enough. Just knowing that's an uptrend is not enough to initiate a long position. The tools we have been using now are historical support and resistance levels, pivot points, Fibonacci retracements, and the more analysis clusters at the same price zone, perfectly the same price level, the stronger that zone then actually becomes. And we want to enter as price pulls back to cluster level and trade in the direction of the major trend. Guys, what you can also do is already initiate that position before. You can already put in a limit order. You can easily trade with limit orders here at Nadex and just wait for price to come back and actually hit your price level there. So you don't actually have to wait for that pullback to occur. You can anticipate that pullback. All those are advantages of using leading indicators. Now, several questions here. Glenn is asking, so the long strategy, as I understand, it is to enter at or near to the floor level based on calculated analysis that the pivot point is moving to the upside. Is that right? Not sure that you mean that the pivot point is moving to the upside. The idea is to identify that cluster where potentially that turning point will occur. And if that cluster is as close to the floor level of my contract as possible, if I'm wrong, if that's not the turning point, then the pain for me is rather small because I'm sitting so close to the floor level of that contract. And even if it drops, I'm kept at the floor level and no more pain for me. Was I right? No. Did I lose money? Yes. Did I lose a lot of money if I position sized correctly? No. If it works, however, I have the potential to make multiple times that, which I've been risking now, just in case things didn't work out. So this is the reason why I want to go in there as close to the floor level there as possible, Glenn. Now, Ian is asking. Ian, thank you very much for that. I will look that up again. Ian is correcting my my pronunciation. Always grateful for that. All right, guys, perfect. Thank you for that feedback so far. Yeah, we have a few more minutes, and I would like to show here some recent trade examples. And yeah, what we're seeing here is euro against the US dollar on a 4-hour chart. We have found a support level here, acting as support several times, acting as support again, support, now it's broken through. Remember, support has a tendency to turn into resistance. Now we're just pulling back here towards that resistance level. So maybe there's a potential setup going on here. Next thing, let's have a look at the hourly chart here. It's the same point in time. What was here, and guys, get a feeling for how those different time frames, how a market looks across different time frames. So that's the setup on the 4-hour chart, and here we have that same setup going on here on the hourly chart. Just this recent move here to the downside from this swing point high to that swing point low. And remember, I was able to draw in pretty much from that candle going onward that this might have been the swing point low. And from that point onward, I knew that this 50% and the 61.8% retracement, that those are potential targets here for that pullback. And see, guys, what happens here, that 50% retracement is pretty much sitting just spot on top of that level that we have identified just previously. So now I have two things supporting that this level might get hit. Next thing, I put in my pivot points, and here, guess what? Another thing that I see is that weekly pivot point and a daily pivot point cluster pretty much at that same price level here, together with the 50% retracement, together with that level that we have just identified. So if we initiate that position here, go for something, and now it's a short position, so I want to enter as close to the ceiling level as possible. I initiate that position here, as close to the ceiling level as possible. Price is going lower, perfectly exactly what I wanted. Now, we talked about some fundamental news before, and this example, we had non-farm payroll numbers coming out. We can trade those numbers and those events perfectly with Nadex contracts. Here in this setup, it would have been a disturbance, which is why that position was closed before the news actually came out. that news trade would be something completely different. You can trade it perfectly and easily. It's just not something that should have gone here within that, which is the reason why it was closed. Other example, Euro US dollar 4-hour chart. Market is in an uptrend. I can easily see that it's uptrend because those moving averages have started to shift again here to this upward pattern, and sure enough, higher highs and higher lows. We have identified this level of support and resistance here, and sure enough, acting as resistance here, acting as resistance, coming back to test this level almost immediately. It very often does. How does it act here? It acts as support. Now, let's have a look at the hourly chart. And once again, swing point low to swing point high, 50% retracement, 61.8. And that pullback here, that level clusters once again here perfectly with those pivot points, with this level, with the FIB retracements, all of those things coming together here. We came back, we hit this level, and price continued on to the upside. All right, guys, time is pretty much up and almost perfect timing. Yeah, if you happen to have any questions, let me know. I'm happy to answer those. And yeah, you can see how straightforward, let's put it like that. It takes practice. You want to stack different analysis techniques and make everything come together and work for you. And if you have questions considering the way that those Nadex contracts work and which spreads to pick, all this floor and ceiling, and just getting a feeling for that, guys, the best thing that you can do is really get a Nadex demo account, play with this for yourself. Those demo accounts used to be 14-day demo accounts. Good news is they are now pretty much forever. So take your time, play around with them, get a feeling for the platform, how easy it is to implement those strategies. And yeah, just get started here on Nadex. You have here on the slide multiple ways to be in touch with Nadex if you do happen to have any further questions. And I'm just reading through the feedback so far, but I think we are good. So guys, yeah, thank you very much for tuning in today. For me, it's been a pleasure, and looking forward to welcome you guys again for our next webinar. So please sign up for those as well. Thank you very much to all of you. Have a great day. Happy trading. Take care. And yeah, of course, until next time. Thanks again and bye-bye.